Welcome to the future of finance. We're standing at the edge of a monetary revolution. For decades, we've relied on traditional systems, but a new digital challenger has emerged, promising to reshape how we value, trade, and store wealth. Today, we're peeling back the curtain on cryptocurrency, not just as a trend, but as a fundamental shift in the global economy. Is this truly the future of money? Let's find out together. Every day, the money in our pockets loses a little bit of its power. We call it inflation, a silent tax that quietly erodes your savings. For most of history, our money has been managed by centralized institutions that have the power to print more, effectively diluting the value of what you've worked so hard to earn. It's a system designed for control, but is it the most efficient way to maintain economic stability for everyone? Imagine a world where you don't need a middleman to trust. Decentralization is the radical idea that we can exchange value directly, peer-to-peer, anywhere on the planet. By removing the central authority, we aren't just cutting out fees. We are shifting power back to the individual. It's a network built on transparency rather than secrecy, where every participant has a stake in the system's integrity, ensuring that no single entity holds the keys to the kingdom. At the heart of this movement is a technology called blockchain. Think of it as a shared, unchangeable diary that everyone can see but no one can alter. It's not just a database, it's a ledger of trust. By chaining records together in a way that is mathematically impossible to falsify, we create a system where truth is objective and permanent. It's the foundation upon which digital scarcity and global trust are finally being built, and it changes everything. How do we prove ownership in a digital world without a bank to vouch for us? The answer lies in cryptography. You have two keys, a public one that you share with the world to receive funds, and a private one that remains your secret. It's like a digital signature that only you can provide. This ensures that while everyone can verify a transaction took place, only the true owner has the power to initiate one. It's mathematical security at its absolute finest. How does a decentralized network agree on what is true? Through proof of work. Computers across the globe compete to solve complex puzzles, securing the network and validating every transaction in real time. It's a digital contest that prevents bad actors from gaming the system. While it requires energy, it provides a level of security that has made these networks virtually unhackable, proving that in a digital world, code can act as the ultimate judge. The landscape of consensus is evolving to be more efficient. With proof of stake, we replace energy-intensive puzzle solving with a system of economic skin in the game. By locking up, or staking, your own assets, you prove your commitment to the network's health. In return, you gain the power to validate transactions. It's a greener, more sustainable way to maintain consensus, ensuring the system can scale to meet the demands of a global digital-first economy. What if agreements could enforce themselves? Smart contracts are programs that live on the blockchain and execute automatically when conditions are met. No lawyers, no escrow agents, and no delays. If X happens, then Y follows, instantly and irrevocably. This removes the friction of human error and the cost of third-party mediation, opening the door for trustless business, automated insurance, and global collaboration at a scale we have never seen before. Decentralized finance, or DeFi, is taking the services we usually get from banks, like lending, borrowing, and trading, and rebuilding them on open source code. Instead of dealing with branch managers or waiting for business hours, you interact with protocols that are open to anyone, 24/7. It's an ecosystem that doesn't care who you are or where you live. It is creating a global financial system that is permissionless, transparent, and entirely user-controlled. Ownership used to be easy to prove with physical objects. Digitally, it was a mess, until now. NFTs, or non-fungible tokens, allow us to create unique, verifiable digital items. Whether it's art, music, or digital collectibles, the blockchain provides an unalterable certificate of authenticity. We are moving toward a world where your digital assets are just as real as the things you hold in your hand, giving creators unprecedented control over their work. In the world of crypto, you are your own bank. This brings incredible freedom, but also significant responsibility. Your wallet is the bridge to the blockchain. Whether it's an app on your phone for daily spending or a physical hardware device for long-term cold storage, the way you guard your keys is your primary line of defense. Remember, in this new frontier, if you lose your keys, you lose your access. Protecting your digital wealth is the first rule of the game. Let's be honest, crypto is a wild ride. We see massive swings in price that would make a traditional stock trader's head spin. This volatility isn't necessarily a sign of failure, it's a sign of a young, growing, and emotionally charged market finding its true value. It's not for the faint of heart, and it's certainly not a get-rich-quick scheme. It is a high-stakes, high-innovation environment where the only certainty is that the landscape will look different tomorrow. As crypto matures, the world's governments are taking notice. We are seeing a clash between a system designed to be borderless and the rigid, localized laws of the old world. Regulators want safety and consumer protection, while the crypto community pushes for freedom and innovation. This tension is inevitable. The big question is whether we can find a middle ground that allows technology to thrive without stifling the very qualities that make it revolutionary. Not all digital assets are volatile. Stablecoins and central bank digital currencies, CBDCs, are bridging the gap. Stablecoins offer the speed of crypto with the stability of a fiat peg, while CBDCs represent the attempt by nations to modernize their own money. It's a fascinating tug-of-war between the grassroots, community-driven nature of decentralized tokens and the structured, state-sponsored version of digital cash. The outcome will change your wallet forever. The real promise of this technology isn't just for the wealthy or the tech-savvy, it's for the billions of people currently excluded from the traditional financial system. With just a smartphone and an internet connection, someone in the most remote part of the world can now save, borrow, and participate in the global economy. This is the great equalizer. It's about building a financial layer for the internet that provides opportunity to everyone, regardless of borders. We are just scratching the surface. From smart contracts to global inclusion, the technology is evolving faster than we can keep up. Cryptocurrency isn't just about digital money, it's about a fundamental redesign of trust, ownership, and value. The future isn't guaranteed, but one thing is clear. The path forward is digital, decentralized, and open. The question isn't whether it will happen, but how you will choose to participate in this changing landscape.